Have you ever wondered if you're truly savvy with your finances? What if I told you that answering a few simple questions could reveal the truth about your money management skills? Hey champions! It's Maxwell here. Whether you're here for the first time or you've been a long-time follower, a big welcome to this enlightening episode. Stick around and you might discover some golden nuggets of wisdom that can help transform your financial blueprint. And, if you feel this information is beneficial, do consider subscribing, hitting that like button, and sharing this video with friends who might benefit too. Your thoughts and suggestions in the comments not only guide our future content but also create a thriving community where we all learn and grow. Let's get into the meat of the matter. Money, it's not just about earning it, but also about understanding, managing, and making the most out of what we have. How we handle our finances often gives a peek into our priorities, discipline, and aspirations. So, without further ado, let's dive into these intriguing questions. Your honest answers will not only show where you stand but might also reveal areas you hadn't thought much about before. Do you have a budget? Now, this might seem like a basic question. But the truth is, many people don't have a concrete budget. They might have a vague idea of their income and expenses, but they don't track it meticulously. A clear, well-defined budget is the first step to financial wisdom. Are you aware of your monthly expenses down to the last penny? This is more than just knowing your bills. It's about knowing where every single penny goes, whether it's that daily cup of coffee or that monthly streaming subscription. Do you have an emergency fund? Life is unpredictable. An emergency fund is not just about having money stashed away, it's about the peace of mind it brings. How often do you review and adjust your financial goals? It's essential to not only set financial goals but also review and adjust them regularly. Your priorities might change, and so should your goals. Each of these questions is designed to provoke thought, to challenge the norms you might be living with and to encourage you to embrace the best financial practices. Being great with money is not a talent, it's a skill that can be nurtured, honed, and mastered. Towards the end of the journey of introspection, you might discover that you're already great with money. Or perhaps, you'll find areas where you could use a little improvement. Either way, it's a win because you are now equipped with more knowledge than before. Gaining clarity on our personal finances through introspection and asking the right questions is empowering. But there's another domain of money management that can be equally, if not more, transformative: understanding taxes. Taxes, while often viewed with trepidation, are an integral part of our financial lives. And just like with personal finance, knowledge and strategy are keys to navigating the complex world of taxation. Instead of viewing taxes as a necessary evil, what if we approach them as another avenue to maximize our wealth? Let's delve deeper into how the financially astute use legal strategies to make taxes work for them. The topic of tax often leads to heavy sighs, furrowed brows, and the deep-set feeling that there's just too much to navigate. But what if I told you that understanding some fundamental strategies could give you an edge, much like it does for the wealthy? Understanding legal tax avoidance versus tax evasion. First things first, champions. The strategies we're discussing here are entirely legal ways to reduce your tax burden. There's a massive difference between tax avoidance, which is legal, and tax evasion, which isn't. Always aim for the former. Leveraging tax-deferred accounts. One of the simplest strategies that the affluent adopt is maximizing the use of tax-deferred accounts. Whether it's an IRA, 401k, or other pension plans, these tools allow you to invest money before it's taxed. Over time, this can result in significant savings. Investing wisely. The rich often diversify their investments, ensuring they aren't hit heavily by capital gains tax. For instance, stocks held for over a year fall into the category of long-term capital gains, which can be taxed at a much lower rate than short-term investments. Real estate tax benefits. Real estate isn't just about buying a house or a plot. For the savvy investor, real estate offers avenues like depreciation, which can offset taxable income, or the 1031 exchange, a fantastic tool that allows you to defer taxes when selling a property if you reinvest the proceeds in a like-kind property. Leveraging tax-deferred accounts. For example, consider Sarah, a 35-year-old marketing professional. She contributes $6,000 annually to her IRA. By the time she retires at 65, she might have invested around $180,000 of her own money. But due to the magic of compound interest and tax-deferred growth, that amount could grow to over $500,000, assuming an average return of 7% annually. When she withdraws at retirement, her tax bracket might be much lower than it was during her peak earning years, allowing for even more savings. Investing wisely. Take the case of John, an entrepreneur. He invested in a startup stock, which drastically rose in value over 2 years. Instead of selling it just after a year and facing a higher short-term capital gains tax, he waits for the 2-year mark and enjoys the benefits of a lower long-term capital gains tax rate. Real estate tax benefits. Lucas, a real estate investor, buys an apartment complex. He uses depreciation to offset the rental income he receives, thereby reducing his taxable income each year. 5 years later, he sells the property at a profit. Instead of paying capital gains tax on the profit, he reinvests it using a 1031 exchange into a bigger property, deferring the taxes and helping his wealth grow. Tax-efficient fund investing. Tax-efficient funds aim to keep taxable distributions low. Emily, a teacher, wants to invest but is wary of the tax implications. She chooses a tax-efficient fund that focuses on long-term growth and minimizes the turnover of stocks, thus reducing her taxable gains. Gifting assets. Wealthy individuals often gift assets to their heirs to minimize estate taxes. For instance, David, who has a vast estate, decides to gift parts of his stock portfolio to his children every year. This way, he's not only ensuring that the assets stay within the family but also reduces the size of his estate, which will be taxable upon his passing. Using health savings accounts, HSAs. HSAs can be a triple tax benefit. Robert, an IT professional, contributes pre-tax money into his HSA. These funds grow tax-free and can be withdrawn tax-free for qualified medical expenses. Over the years, Robert not only saves on taxes but also ensures he has funds for medical emergencies. Charitable donations. Alexandra is passionate about wildlife conservation. Every year, she donates a significant amount to wildlife charities, which not only supports a cause close to her heart but also provides her with deductions on her taxable income. Each strategy, when understood and applied effectively, can lead to substantial tax savings. It's crucial to remember that while these examples provide a general overview, the individual circumstances and current tax laws can influence the outcomes. Always seek professional advice tailored to your situation. As we wrap up today's discussion, remember that it's never too late to start, adjust, or reinvent your financial journey. And if you ever feel stuck, remember this community is here to support you. We're all champions in the making. Before you go, do remember to show some love, subscribe if you haven't, hit that like button if you found value, and share this video with someone who could benefit. Your voice matters, so drop your comments and suggestions below. Let's make this channel a hub of learning and growth.